All right. Let's get out of here. All right, pro tip. You have to turn your microphone on. All right, let me get out the chat open. Okay, we are live. Howdy, y'all. This is Lewis Weil at Money Positive, Unscary Financial Planning for Everyone, on a never before done Saturday stream. I'm at the Museum of Human Achievement in Austin, Texas, where I have my studio. This is where I work from every day. And it is part of an arts collective called the Museum of Human Achievement. And today are some events going on, Fusebox Festival and Games Y'all, the Indie Games show. My partner, Ray, aka Party Time Excellent, is showing some work she's done for Famicom and the Welcome to My Homepage.net residency. She's showing some work, and she got done setting up, and so I snuck over to my office and decided I would do a little live stream while we're waiting for the show to start. I'm being very professional. I've got a blue margarita from the event space and trying to light myself a little better. I poached the light off my aquarium, which I promise I will give you all a tour of someday. And I even wrote some notes about what I'm going to talk about. Look at that. I prepared. I'm such a professional. And I decided to do a kind of extemporaneous live stream because it's one of the biggest times for personal finance right now, the tax deadline for personal taxes. Today is Saturday, April 15th. On Tuesday, April 18th is the deadline for filing and paying personal tax returns. And we are just in the thick of it, and people can't get enough reminders to take care of their taxes. So yeah, by Tuesday, you need to have filed and paid your personal tax returns in the United States. There has been an automatic extension for people in California due to all of the climate events, all the atmospheric rivers that California has been dealing with. So they have an extension automatically through May 8th to May 18th. Instead of April 18th, so they have an extra month. So if you're in California, you have an automatic extension. But be mindful of it and maybe just get it taken care of. And you can file an extension. You can get, I believe. Let me preface all of this by saying I'm not a CPA. I do investment advice. I help people with budgeting. That ends up being a lot of dealing and interacting with the tax world, but I don't help people file. I don't do any filing beyond my own filing and Money Positive's filing. But we have an accountant and tax preparers and CPAs for that. So I'm just have a little bit more knowledge than just the average person, but I'm not, it's not what I do professionally. So just sharing what I know and what I end up helping clients with, hopefully for your benefit. One really, really important thing to keep in mind about filing an extension is it's an extension to file, not an extension to pay. And what that means is if you are self-employed and haven't been paying quarterlies, if you haven't prepaid and you file an extension and wait until months from now to file, there might be penalties and interest on top of the money that you would have owed if you had paid on time. If you have a salary and have been doing tax withholding all year, if you're self-employed and have been prepaying your quarterlies, it's probably less of a big deal because you've done the payment part. but it is not an extension to pay. In fact, like I didn't even know that before I started doing Money Positive. I would have, also assumed that an extension meant an extension to pay, and it does not. And I have met people where that has gotten them in trouble. So if you're self-employed, I would just encourage you to try to get it done. You know, you the sooner the better. If you are self-employed, I highly recommend working with a professional. It's definitely too late to start with someone and have it be on time, but engaging with someone to help you professionally is still probably a good idea if you make your living as a self-employed person. Just like the ability, the knowledge to get deductions and the confidence that comes with working with a professional, I find to be well worth it. I will share, we have an extension. Hopefully we have paid plenty already, but both personal and corporate taxes, we just have a lot of documents. We have a lot. We actually had a snag with our HSA and are still waiting for some documents. So your financial planner, well, maybe not yours, but a professional financial planner filed an extension. Nothing wrong with filing an extension. I wish it was going to be done, but whatever. And we paid, so hopefully it just means a delay in getting our return. One thing that you have to might want to do before the deadline. Actually, let me come back and talk about deductions again, because I've seen from a few people, self-employed people, who are like, oh my God, look at that, I owe so much in taxes, and then realize that they didn't do their deductions. So a lot of times people don't understand what deductions or what are often called write-offs might be. Write-offs are taking the costs of operating your business out of your income. So I'm going to use nice round numbers. Most people don't make $100,000 from their self-employment, but let's just use $100,000 because it's a nice round number. So pretend you are some sort of consultant and you made $100,000 in revenue. If you didn't take deductions, you would pay income taxes on the entire $100,000. And when you're self-employed, you pay both the taxes for the business and for as a person, which is 15%, just like the base taxes. And if you have a salary, you only pay your half. So when you are self-employed, there is extra taxes that you pay because you are both the business and the person collecting the income. So that's often a surprise to people. So you want to, within reason, find things that you can deduct from the cost from your revenue so that you made less money on paper for your filing. And so if that might be things like a home office, which would include both part of your rent, part of your utilities, your internet, your cell phone, any subscriptions that you have for your practice, if you have Dropbox or Google Drive. It also includes mileage if you go to meetings, if you go to networking events, travel, parts of entertainment and meals if you take people out to network and get coffee and meals. I don't know the exact how much you can deduct from that. It's not 100%, but you can deduct a lot more. A lot of times people don't realize that they can deduct that stuff because they would have been doing it anyway. But because you're self-employed, you are doing it for your business. So pretend, you had that $100,000, but you had $30,000 in expenses between your office and buying computers and software and all the things that come with running a business. So if you had $30,000, you would tell the IRS, hey, I made $100,000 in revenue minus $30,000 in expenses, tax me on $70,000. So one thing I've seen people get tripped up on is reporting the entire amount of their revenue as their income, when in fact it was, it was only a fraction of that they actually ended up paying themselves. So this is a little out of my depth. I do QuickBooks to track our company's deductions. When I was self-employed, they were my deductions. You want to work with professionals. You want to have good bookkeeping so that you can catch all your expenses, which is one of the reasons I really encourage people to run their businesses out of dedicated checking and savings accounts so that they can keep an eye on what's business and what's personal. But that might be for another time because, we've only got a couple days. So, do what you got to do to get your filing done. Before you file, this is one that catches people every now and then. If you want to make a contribution to a retirement account, specifically a traditional Roth or SEP IRA, you need to do it before you file. I oftentimes have people who are super on top of things and they file as quickly as they can. They're done in February. And then April, they come and tell me like, hey, I want to make a contribution to my Roth for last year. And well, you already filed. Like you already told the IRS that you didn't make a contribution. I'm guessing you can like file to an amendment, but that's a lot of work. I don't know how to do that. I've never met anyone who's done it. So it's really important to get those deductions before you file, to get those contributions before you file, which means, if you're working with someone to do your taxes, let them know that you're planning to do it, and then share anything that they ask for. Oftentimes there will be tax documents. Sometimes they just ask for a screenshot to show that it was done. Roth IRA contributions are really common. That's often what I'm sending people to do. Roth IRA and traditional IRA are accounts that anyone with earned income can contribute to. There are some caveats to that. For 2022, the limit was $6,000. For a traditional IRA, you would deduct that from your income. So if in a world with the person who made $100,000 from their consulting business, they would say, from the top, I had $100,000 in revenue. I put $6,000 into a traditional IRA. Tax me on $94,000. It is pre-tax. You don't pay the taxes today, but you will pay the taxes. Where's my camera? Later. I'm really tight in. I can't make big gestures. You would make. You will owe taxes on that $6,000 and any gains later when you start taking that money out. For people with you can also do what are called Roth IRAs. Roth IRAs, you pay the taxes now, and then you owe nothing later down the road. So if you made $100,000, you put $6,000 into a Roth IRA, that $6,000 would not reduce your taxable income. But later, when you go to start using that money, you won't owe any taxes. And if people do nothing else, I like if they haven't done any 401k, if they haven't done any other investment for the year, I like for people to do Roth IRAs first before doing other stuff, because Roth IRAs are just really good accounts. They're very versatile in a lot of ways that, I'll have to make a bigger video. Again, this is just trying to help people get ready for tax day, which is in a couple days. So when you go to make a contribution, the common ones I use are Betterment, Vanguard, Fidelity. I've seen a lot of people using Wealthfront. There's a number of places, TIAA if you're a teacher. Well, wait, that's more for 401ks, or 403bs rather. But you need to designate what year it was for. So when you go to make the contribution, there will be a pull down menu that says 2022 or 2023. I've seen a lot of people who don't notice that and accidentally contribute to the wrong year. So make sure that it is a pull down menu for 2022. If you mess up, it's not the end of the world. Call customer service and get them to fix it. Let your accountant know what happens and that you are working to fix it. be communicative with your accountant, but also know that they are just absolutely inundated right now. I have all the empathy in the world for anyone who's professionally involved in tax prep, because it's super important to everybody, but that it has a really hard deadline, and they're just working with the information that we give them, and then we expect them to be magicians and then get mad when they don't read our minds. So have some empathy for your tax preparer, and be clear and give them, they can only work with what you give them, so you have to give them everything. If you make There are cutoffs for traditional and Roth IRAs. I don't know them off the top of my head right now. I should have looked it up before going in, and I don't want to BS y'all. But you can just look up, search for income limits for IRAs. That doesn't mean you can't contribute. That just means you have to. There's a few more steps if you made too much money, and the limits phase out of how much you can directly contribute to a Roth, and whether you can get the pre-tax treatment in a traditional. But what it means is there's this weird loophole. I don't know why it exists. It has existed for years. It seems like it will continue to, but it's called a Roth conversion, where people who made too much and cannot contribute directly to a Roth IRA can convert to a Roth IRA. So what you do is, if you made too much money, and I was starting to say the limits are different whether you're filing as an individual or married. The income limits are different. So just look it up. There's very clear tables that explain it, as clear as it can be for something that is not intuitive. And what you do is you contribute to a traditional IRA, you wait for that to go through, and then you say, you know what? I'd like to convert that traditional IRA to a Roth IRA. So we end up doing that with people a lot. I know you can do it. If you do it at Betterment, they have the ability to do it on the website. You kind of have to dig around and find it. I can't remember if Fidelity and Vanguard let you do it directly on the website. I know I've done some where we call Vanguard and get them to do the conversion. But it's just a nice way for to get some Roth assets if you made too much and can't contribute directly to a Roth. So that's actually why one of the things that I'm really busy with right now is helping people do those conversions. The other big one is doing what are called SEP IRAs, SEP IRAs, which I think stands for self-employed pension, which is kind of a funny name because it's not a pension, it's an investment account. But that's what they're called, SEP, SEP IRAs, and they are for self-employed people, for their businesses to contribute directly to their retirement. So this instance where, like, let's use this person that made $100,000, and let's pretend they had no deductions just to make the example easy. You can put, I believe it's 25% of your earned income into a SEP IRA. So this is a really powerful way to get a lot of money into a SEP IRA. It caps off at I think 50 to 60 grand. So even if you made $200,000 or more, you can put a lot of money into a SEP. So it's a really powerful tool. I really, really, really want people to only do those, or to do those with the help of an tax preparer and accountant. Like, I won't calculate them for people. I know the formula, but you have to be able, I can't defend you in front of the IRS. So I am not comfortable doing that math for people. So usually we do is ask the accountant, what is 25% of their earned income that we can contribute? And then we go set that up. I usually go with Betterment or Vanguard again. You just open the account and fund it. And you need to do that again before the deadline. So it's a little complicated because you have to have your accountant figure out what your earned income is, tell you what that number is. Then you have to go do the SEP IRA contribution and then let the accountant know that you did it. You just have to have made the contribution in time, but it's kind of silly because you have to like do all the math, do all the funding. They just closed the garage doors. My lighting just changed. You have to do, you basically have to do your taxes and then have them do your taxes again. I think it's kind of silly, but it is a powerful tool. The other kicker is you have to actually have the money laying around. So a lot of times those, the amount that people can put in ends up being like $10,000, $20,000, depending on how much they made that year. But you have to have set the money aside all year. So oftentimes you either don't have that much money laying around or you're not comfortable doing that. So I help people do SEPs a lot, SEP IRAs a lot, and we don't put in the full amount. Nothing says you have to do it to the full 25%. Oftentimes we'll have someone do a Roth conversion up to the 2022 limit of $6,000. 2023, it's $6,500. And then do their SEP IRA up to the limit or up to what they're comfortable with. Because oftentimes when I'm helping someone do it, we look at how much cash they have on hand personally and in their business. And, what other obligations do they have coming up? Do they also have to pay quarterlies? And how much, if we put a significant amount into a SEP IRA, what is that going to mean for their emergency fund? So it's a lot of balancing between immediate needs and, doing stuff for your long-term financial security and layered on top of that tax efficiency. Big believer in tax efficiency, but I find that people overemphasize tax efficiency and think and undervalue flexibility in their budget, having strong emergency funds, and contributing to their long-term financial security. People kind of rabbit hole on just not paying taxes. The taxes are going to get paid. So, be smart about it, but, kind of have to accept it. The last thing I kind of want to rant about that I see people not be aware of often is getting on payment plans. I have people who reach out and they're like, oh no, I have a $10,000 tax bill. I have a $20,000 tax bill because I didn't pay my quarterlies and I didn't have a lot of deductions. Happens pretty often. And I don't have like that much money I can't just write a $10,000, $20,000 check or $6,000, $5,000, $2,000, whatever. It's a lot of money and it's a lot of money to you, on April 18th. I just don't have it. Or it will ruin my finances. I'll have to empty out my emergency fund to do this. And it's not great, but I often encourage people to instead get on payment plans. The IRS is actually pretty chill about it. Like that they will charge you some amount of interest, but the interest rates are quite reasonable. I saw one where it was about the same interest as they would pay on getting a savings account. So we actually decided to leave most of their money in a savings account to be getting interest to offset the cost of getting on the payment plan so that they wouldn't empty out their emergency fund to pay their tax bill. But we say you're going to pay it off over the course of 6 months. There'll be a little bit of interest, but we'll also be strategic to make sure that you're getting interest on the stuff that you're saving and sending off. So, look into it. I've never set one up myself. Just gotta say, but you can I believe you can set them up on the website, and your tax professional will definitely know more about it. So I just get a lot of times where people don't realize that they have that option. They think they just have to write the whole check. It often sucks because around the same time, people are also having, if they're self-employed, have their quarterly payment done and due as well, because it's the end of, we're in the end of Q1 of the year. So they often end up owing like yearly taxes and quarterly taxes. So this is why being strategic and budgeting is so important, and setting aside money and paying your quarterlies. So oftentimes what we're helping people do is pay off last year or multiple years, getting in the habit of doing quarterlies. And it can take a while of like budgeting, setting up, saving up money in the business, getting used to setting aside money for quarterlies, getting in the habit of paying quarterlies, and getting out of that treadmill where they're constantly writing big checks and ending up with nothing in the bank. So, give yourself some grace. Like, no, you got to do what you got to do to get through this tax season, and just work on making it easier and easier for yourself by having good books, tracking your expenses, having dedicated accounts, working with a bookkeeper, working with an accountant, working with someone like me. And you can make this a lot easier on yourself and be more prepared. You're still gonna have to pay your taxes, but it'll be less of a surprise. And you can get to a place where you're not, where it's not constantly, such a big source of stress. That's what I want for everyone, including myself. Ours aren't stressful. There's just a lot going on when you run a business and you have your own returns. Let's see, gain deductions, extensions. Yeah, that's everything on my list. I'm gonna check the chat real quick to make sure there's no burning questions. No, I don't see anything that is left to cover. So I will say, reach out, Lewis, Lewis, at moneypositive.com, info@moneypositive.com. Go to moneypositive.com and you can make an appointment. I am taking off a few days after this. I am super burned out. So after the tax deadline, I have cleared my calendar and I am going to hide under a blanket and watch comforting cartoons and eat nice sandwiches. So I will not be around next week. But the next time you see me, I should be much more rested. And don't panic. Stay on top of it. Reach out to me. Happy to help you. I know some good accountants. Again, let me know. Get you in touch. Thanks, and stay money positive. Take care. Stay sane through tax season. We'll get through it together. And I'll see y'all next time. Bye.